live. We're here for, I guess this has been almost 5 years now, 6 years now that I've been going live for. So we're in a new year. It's it's been fantastic. 2023 has been a great year so far. A little bit over a week and a half in, and already I think I'm up like 200 grand so far this year. It's just been great. Last year was I mean, there was a lot of great experiences, a lot of great things happened, but 2022 was a really bum year for asset classes, real estate, stocks, everything. Pick an asset. Bonds had the worst performance in 100 years last year. Just so many things going on. Here in Florida, we closed about what? Hey everyone, how you doing? Welcome back to the live stream. We're here in the exact same hotel room that I was in last week. So I've been here for a little over a week now, and it's not too bad. It's a mess, but we get a full kitchen, which is nice. It's a little suite, but I'm getting it for super cheap. My mom works at Marriott at the call center, and one of the perks of me letting her live for free in one of my houses is she hooks up some pretty good deals on hotels. So can't complain overall. But last week, it's been now exactly 7 days since we closed on our newest Florida property in PSL, Port St. Lucie, near Stewart. And yeah, it's gone by quick. We started off just ripping out some floors, ripped out all the floors, all the trim, repainted the whole house, all brand new floors, redoing the kitchen, new trim, new everything, getting the pool looking sharp, redoing the whole entire exterior as well. Full flip in a week. And I'm like, wow, the guys down here work hard. They work well, reasonable cost control, just tons of great deals overall. I set up a Sherwin-Williams account, same as at home, 50% off paint when you test drive. Found like just some awesome deals down here. So we're getting this place turned around. Not hopefully. Next week, I will come to you from the project and I'll walk around so you guys can check it out. Wait, yeah, what day is it today? Yeah, I've been waiting for the internet to be AT&T to install internet now we put in the order almost 2 weeks ago now, and they're just horrible down here with their call requests. It takes 3 weeks to send a tech out to set up internet. What? In Canada, it'd be like next day we'd have the internet turned on at the house. It's like, what? But yeah, so many great things are happening. It's just been great to see the progress here. And I kind of challenged myself. It's like, hey, can I flip a 3,000 square foot, 5 bedroom, 3 bath, big house that's really run down? Can we re-stucco it? Can we get it all painted? Can we redo, make it just beautiful? And can we make it pop in like a week and a half? And I was like, and on HGTV, they do it in a month. They fast forward it through an episode, but they do it in a month. And I was like, why couldn't I? And so we had like 8 guys at the property. It's just been going really well. I wish I had documented things better so I could share with you guys just how fast and how well things are going. We repurposed cabinets. I've used Facebook Marketplace down here and a bunch of groups that I joined, like local, social groups people have formed on Facebook here. There were some that have 30,000 people in it. I made a post and I was like, hey, I'm looking for flooring guys, looking for painters, looking for trim guys, looking for handyman, looking for, pool guys, looking for this, looking for that, put it out there. I got like 20 or 30 good recommendations from people sending me pictures of the work that people had done. And I was like, whoa, and I call some of these contractors, and like in Canada, it's like the guy might come out and look at it. They might be available in 6 weeks. Everyone's available to work. Like we're in a recession over here and it's fantastic. Like you can find good quality contractors at reasonable prices that are ready to work, and they work hard. Like the immigrants down here, it's not like in Canada where the guys are like, just hitting a fag for a bit outside, just chilling, like smoking darts and not doing any work. Like these guys, they work. They get to work and they're like, we're ready to go. It's 8 a.m. Let's push it. And there's no slacking. It's just, I don't know. It's a different culture down here and it's great. I love the capitalist mentality. As someone who loves to look for the best deals and look for the best opportunity and all that, it's been great down here in Florida. So I think we're going to keep coming back every winter, and this is the second winter now. So we're just solidifying that. I'm hoping to transition. I pulled my daughter out of school. All 3 of my kids, we're going to get into the homeschooling program. It's going to be, I'm hoping it's going to be a situation where we just spend our summers in Canada, but the rest of the year we're in the Bahamas for tax purposes, checking out Florida too, because it's so close, and getting some businesses going in Florida on the mainland, and then, Bahamas as well you guys know my take on the Bahamas. You don't have to file a tax return at all in the Bahamas. There is no reporting personally. Like, as in, you have $1 billion in crypto, you're Sam Bankman-Fried, and then the proximity, right, to Florida. You're 60 miles away. It's literally a suburb. Florida is a suburb of the Bahamas. It's the closest. It is the geographically closest tax haven that exists to Canada or the United States. So, especially to the U.S., right? So, that's the long-term play. But let's talk about stocks. You guys been following stocks? I am doing a refinance, and I had to clear off a bunch of lines of credits, and I had to move capital over and snapshot things, and it's horrible. I sold off my Interactive Brokers portfolio to cash. I even closed out my Meta position, my Intel, my Amazon. My three largest holdings in my portfolio were Meta, Amazon, and Intel. And just temporarily, for like 3 weeks, the bank was like, can you just close everything out, sit it in cash, and we'll refinance you, we'll give you auto approval. It's stupid, but like the bank has something where if you show cash in an account, they'll approve you. But if it's in a stock account, they don't like it. So anyway, I did that, moved it over to them. We'll get the mortgage all set up. I'll buy back these stocks. I'm like, oh, market's going down, whatever. This is like, we're coming in towards the end of the year, and end of December, I liquidated all my positions. I had like $1.5 million just in between Amazon, Meta, and Intel. And if you guys check the stock price, I sold my Meta at 115. I'm like, oh, I'll just buy it back probably at 115. I put some options on it so I could buy back in. But Meta goes from 115 to 136. Amazon's like $80 a share to like almost $90 a share. Like everything just rips up 17% right after I sell. And the 2 weeks after, I'm like face palm. So I could have made another $250,000 had this refinance not timed perfectly with when I sold to when everything ripped up. I still think there's more pain to come. It sucks to watch, like, not making money that you would have otherwise made. It's painful, but it's not as painful as losing money. In 2022, there was a bunch of losses. I had my first ever real estate loss. Well, we haven't sold the property yet, so hard to say, but it's very likely I will have my first ever real estate loss in 90 different deals I've done. And this one, I did not expect it. Overall, of like the 15 or so projects, we've done, there was lots of profit. And so like one's going to lose, is going to happen. But I've never lost on a real estate transaction ever. Bull market has saved me. But this was like just the timing of when we bought. The comps I relied on were bad. The market's cool. There were some issues that came up with this property. I was not expecting it. And so like 2022 was a bum year overall. I maybe made a little bit over $1 million last year just in flips in 2022, but I lost that whole $1 million in crypto and stocks. So it's like, I'm just like you make a whole bunch of money, work really hard, and then there's a recession. The good news is though, guys, you're watching this, that we dollar cost average, we buy in. Stocks like Meta were almost 70% off their highs earlier that year. Meta is like a cash cow, the largest social media company in the world. They're going to be around. WhatsApp, Instagram, Facebook, Messenger. It's how people communicate. Like your Amazons of the world, all of that's going to come back. Like $80 a share for Amazon. Are you kidding me? It's going to be like 150 within the next 3 years. So there's a discount, like 50% off on all stocks right now. It may get a bit worse. We got to wait for the Fed to speak. We don't know exactly how it's going to go, but there's going to be a ton of opportunity. Real estate in Ontario is down 30%. So if you bought a house for $1 million, it's probably worth about $7 at the peak. Like February last year, you got caught up in the hype and you bought a house in Toronto for $1 million. It's probably worth about $700,000 now. That's just the reality, give or take 5%. That sucks. You bought a house for $1 million, you put 30% down and you have nothing, zero. You sell tomorrow after closing costs, commissions, break your mortgage penalties, all of that. You probably have to bring money to closing. If you bought a house for $1 million in Toronto, you put $300,000 down, your whole 300,000 is gone, everything, 100% loss. Crypto would have been a better investment. The bank now owns more of the house than you do. You have to bring money to sell it. You want to go sell that property in the open market right now, net of closing costs, you got to bring cash to closing. That's the reality for a lot of real estate investors right now in certain segments, in certain markets. Florida hasn't gone down that much. They've seen about a 10% drop, maybe 15% in certain pockets. It's getting better. Getting worse for people who have property, but getting better for people like me who want to start buying. I'm going to buy 50 houses in Florida. I'm looking at like your 100,000 to 400,000 price range in Florida. You can get some nice concrete block construction, quality 2,000, 3,000 square foot, big houses, 2-car garages with a pool for like $250,000 in Florida still, USD. but 250 grand, 300 grand, you can rent that house out on Airbnb for like 5 grand a month. That's like, that's generating a 20% cash on cash without leverage. With leverage, you can get 60, 70% return. You buy a bunch of those. I'm going to buy I'm going to rehab them and then refinance all my money out. So I'll have zero money in the deal. The bank will put a mortgage on it, 75% loan to value. And that 75% loan to value will be more than I purchased it for and renovated it for. So I have zero. The goal is to have zero money in the deals. I want to get like, let's say even conservatively, I did like 6 of those a year. For the next 5 years, that's, just do the math on that, right? That's 30 properties. 30 of those things, I think they're going to double in value over the next 5-10 years. At that that cost of construction, it's just great. Like you honestly can't even build them for the cost you could buy them for. And so land's free. And I feel like those kinds of opportunities are going to be slam dunk buys. And I want to build portfolios like that. And I like Florida for political reasons, proximity reasons, I think as well. It is the warmest, consistently warmest overnight and during the day state in the United States. It's the most southern tip on the mainland of the United States. And then just the proximity to tax havens, I think, gives it some huge bonuses. And I think there's also this divisive culture going on in the United States right now between, the left and the right. And Florida's kind of anchoring itself as a right haven. And I think the left states like California are going to drive away all of the capital, all the business. And it's going to go to the states like, it's either going to go to like Las Vegas or, like in Nevada, it might go, Arizona, maybe Florida. Like those are states that I think will get a lot of the capital. The rich will just flee. There's like this mentality that the left think that like they can just, the rich will just stay and pay. We'll just take everything they have and they'll just give it up willingly. So you kidding me? They'll just leave. I mean, that's why communism doesn't work, because the people who are super achievers just, like the only way it works is if every country in the whole world gets on board with like a communist, sort of like regime that globally controls everything. That doesn't happen, it'll never fly. I just don't honestly think it'll happen because humans aren't equal. I mean, we might have all the right to live and eat and work and, we're all equal in the eyes of God, I suppose, but humans produce different monetary skills. And some people's skills are not valuable. They're born just 80 IQ, they can't do anything. That person cannot produce financially the same as someone who's got 140 IQ and can work 16 hours a day like a monster, just super efficient. That like superhuman can produce 10 times someone else can produce. And so they should have, I think, 10, 20 times. But anyway, I don't get into philosophy. Let's talk about some opportunity here. Go to the Q&A. What are some of the cool things you guys are seeing in the market right now? Maybe there's something I'm missing. I think there's tremendous opportunity right now in bonds. There are some bond funds right now generating a risk-free 8%. That's unheard of. Like we haven't seen that in decades. So that's amazing. Especially if you think rates are going to come back down, bonds can be a great play. They will increase in value as rates come back down. The bonds you have at 7-8% are worth a lot of money. So can be a great play. If you think rates are going to keep going higher or stay high for longer, remember the Fed Jerome came out and said, hey, rates are not going down in 2023, contrary to what people believe. It's, so that was a surprise in December and it drove the markets down. Now they're rallying again. We'll see a bear market rally, but I don't think we're done. I could be wrong. I mean, we could have been at the bottom, but usually the bottom of the stock market is when the VIX, the volatility index, is spiking. And the VIX just isn't really spiking enough for me to believe that we're at a bottom yet. Hard to say, I think that in 5 years, we know that all the stocks will be worth a lot more than they are now. And same with crypto, and same with real estate. So buy, hold, cash flow, and you'll be fine. Diversify. That's what we know, right? The I bonds dropped. Someone just jumped in about I bonds there because we're talking about bonds. I'll hit that question. Support City. Yeah, we've seen, there was maximum fear and the fear sort of subsided. It's very possible so right now the bond market doesn't believe the Fed. Effectively is what's happened, right? If you looked after Jerome spoke, he was like, rates are not coming down. 2023. And by the way, like when Jerome speaks, Canada listens, Europe listens, everyone listens because they're the reserve world currency. And whatever they do, everyone else has to do too, or they get fucked with hyperinflation. You have to do exactly what the US does. So if they decide to keep hiking, everyone else is fucked if they don't. So just accept the fact. I know I got my Canadian followers who are like, Mike, I only want to hear about the Bank of Canada. It doesn't matter what the Bank of Canada thinks. it matters what the Fed does. So that's why we have to watch what Jerome does, what the US does, because again, we just follow suit. We're like a little cousin. And whatever big cousin does, we got to do too. However, there's, some exceptions to that. And like, there are a number of reasons why there's a really big debt cliff that exists in Canada. Honestly, in the US too, there's been chatter about defaults in August. If the House can't get itself in order and people can't get behind something to increase, basically they just all agree, hey, we're just going to increase the debt ceiling, so we don't hit a ceiling. It's just like we give ourselves more credit room. It's like, oh, we're gonna default? No. We'll just increase our line of credit. But we are the ones who issued the line of credit to ourselves. It's like, oh, that's fine. Bank of Canada ran a huge loss last year, last couple quarters, and they just put it aside. They're like, oh, we're just going to put it somewhere not on the balance sheet, but like we'll bring it back in years where we have surplus. Like we'll just pretend we're not dying right now with interest rates being twice what they were a year before, which is a whole nother. There are so many piles of tinder ready to catch a spark to cause like financial collapse. But again, I think that humans will get together and be like, we don't want collapse. Let's just find a way to kick the can down the road a little further. And hopefully, there's a Republican leading party that's fiscally responsible, and because not all Republicans are, many of them aren't, but that's fiscally responsible. And the next bull run, we hope that they can take profits, meaning like when there's a big tax surplus, that they can take some of that and get things under control and invest in their country, but at the same time pay down debt and the investments they've already made in the country. But yeah, such is life. Let's go to the Q&A for a sec here. I'm happy to just crush some questions. Eric, how you doing? Good to see you on. Mason, good to see you on too. Aiden, how you doing? Port City says, hey, Mike, hope all is well, champ. I mean, yeah, I can't complain. 2023 has been a lot better than 2022. We've started off with a big rip up, so I'm excited about that. I do have lots of cash right now, which is good. I've got some projects and lots of projects in Canada that are underway. And despite the market, we'll call it market headwinds. So like I buy properties at big discounts, renovate them, either flip them, refinance them, and keep them. There's a couple of options. I always have exit strategies for every deal. But it sucks when you buy a property at 35% off, and you're like, hey, this has got like a $250,000 profit, and then you find out that like the market is fighting you. And in the time it took you to turn that property around, the market depreciated 10 or 15%. And so a lot of your profit got evaporated. Thankfully, I buy really smart. I'm good at what I do, and so I'm able to have a good profit margin on those deals. It also is helping that construction people are starting to get laid off, so it's easier to find workers who want to work for a reasonable price. And the ones who are good, who are used to working for, in construction, typically what you do is there's like two places to get paid really well. It's like unions work for government contracts where everyone just fucks the dog and takes forever to do the jobs. And so they all get paid $50 an hour to do nothing. 3 people watch while 2 people work. That's the construction world where they show up at 9:30, have coffees, have a long lunch break, they finish at 4 o'clock. That's the public sector work. That's really cushy, easy construction work. And the good workers go there because it's easy work and they get paid well. The other place that the really good construction workers tend to go is working for how do I call it? Like your G.I. Jane, you're like your homeowner, your typical homeowner who is like has a luxury shower they want to do. And they're like, I don't care if the shower costs $15,000. I want it just looking mint. And I'm not thinking about profit, not thinking about cost base. This $15,000 shower is going to add $5,000 in value to my home. But like in my mind, I'm going to be here forever and I want this shower. And I'm like, I want the kitchen for $75,000. Whereas like me, I'm in and out with the kitchen for $3,000. I'll do a bathroom for like $2,500. We're in and out cheap, right? So the flipper, well, we do a lot of volume. We keep people busy. We pay a fair wage. We're not the ones you can milk. So, and by the way, in a recession, now their stocks are worth nothing. Their husband's getting laid off. The kitchen isn't $80,000 anymore. In a bull market, yeah. In a bull market, you put a $50,000 shower in, sure, the fanciest tile and whatever. But in a bear market, those guys who are used to getting paid $1,000 a day are like, oh shit, I can't find anyone who wants to pay my exorbitant price of $100 an hour, $150 an hour. Now it's either sit at home or take on work where I can make $400 a day. And so that's great because, I can now absorb those, I can find those workers and they're competing. All the different workers are bidding for jobs and they compete against each other and they drive the price down. That's a recession. So though it sucks on the buy, well, it's actually great on the buy side. It sucks on the holding side. If you're holding property right now, it sucks to see it go down. If you're flipping property right now and you're doing a long flip where you got tenants you have to evict, or some reason why you have to hold that property for longer. Maybe it's a huge renovation job. Maybe you got the city involved. If you're taking on a structural job, I'm trying to stay away from all structural renovations right now. I hate dealing with engineers in the city. I've spent on one project a year and a half battling with the city to tear the roof off a house, and we did a second story addition, effectively rebuilt the house, and it was way more than we had originally bargained for. We got unlucky with bad inspectors who came in and were like, you gotta do this, this, and this. And they threw the book at us and we're like, this isn't even part of the scope. Like, this is the permit. This is what we're trying to do. And they're like, oh, but you bring the whole house up to code. And so it just became this whole thing. Even the engineer was like, wow, I've never seen an asshole the city this bad. They waited 14 weeks to respond to our permit during COVID when they're supposed to be like 8 days. We just sat for 3 months waiting for them to respond. And when they responded, the engineer was like, it's on the drawing. And they're like, oh, sorry. And they take 15 more days to respond. It's like, you didn't open your eyes? That's the city. I mean, anyway, I don't get into that, but I try to only, here's what you can do. If you're looking for like an ideal flip, and give you guys some knowledge, some wisdom. If you want to flip for profit, you want to flip fast. Time is money. And the longer your holding costs, the worse it is, the lower your ROI. So ideally what you want to do, and this isn't always the case, but you can plan this out when you're looking for types of deals that qualify. I try to only look for flooring, paint, trim, kitchen cabinets, vanities, toilets. In Canada, that includes roofs and windows, no permits. In Florida, you can't do a roof without a permit because the whole hurricane stuff. Roofs go bad so quick and you have to do a really good job. So they have to like have some engineering stuff involved, I think, with the roofs here. We did one and the contractor took care of everything for us on one of our Florida projects. So I was thankful that the roofer knew what they were doing with the metal roof. He took care of it. But in Canada, you don't need permits for a roof. You don't need permits for window changes. If it's the same opening size, doors, windows, siding, roofs, no permits. If you're doing floors, ripping out floors, putting in new floors, no permits, like just carpet or tile or hardwood. If you're talking about like doing paint or you're just gonna touch up some stuff, anything cosmetic, like you can rip out kitchen cabinets. If you're putting everything back in the same spot and you're not touching the plumbing, again, you don't need a permit. You pull out the boxes. They're just boxes that screw onto the wall. Take them off, put new ones on, put granite quartz, put in new appliances. You can like basically transform a house without a permit. And that can be done quick. As I'm doing here with this Florida project, 10 days, 14 days. If you have good construction crews and you line things up properly where, the paint's done before the flooring and where the mudding, I made sure, everyone got all the mudding and the touch-ups and all of that kind of stuff done before the paint came in. Right? And then making sure that all the painting is done before the floors go in. So they're not getting paint over the floors. And then making sure you get your appliances in at the very end so it doesn't slow down all the trades. Just lining everything up so you have, your demo done before your paint starts. Because if you didn't do all your demo properly, then it's going to be a gong show. There's just a certain order to things. And you can get it all done without permits if you avoid any major structural changes. So just don't put up walls. Don't, just do trim, floors, paint, cosmetic stuff. I think you could transform a home cosmetically. You find a home with like dog shit on the floor and like nasty carpets and just the most grungy walls and the worst colors and the bad appliances that don't work and all of that, you get a great deal on a property, turn it around really quick and cheaply. And that's what you want to be doing when you're trying to either burr real estate. So even if I'm buying to hold, I want to find a diamond in the rough with good bones, but that I can turn around, right? Had to pull a permit to replace a window. Canada's broken. You don't have to pull a permit not in London, Ontario, as long as the opening is the same size. If you're going to try to change the header to make the window bigger, that's a problem. You can make windows deeper if the header is unaffected without a permit, was my understanding. Now, if you're going to cut in new windows, you're going to expand the window's width, then the header, that's structural. You got to get an engineer to stamp it. I've had to do half a dozen permits for that kind of stuff, and I just don't do it anymore. We're just like, nope. Not going to take a project on like that. I'll do all the cosmetic stuff, sell it. Someone else can take on that stress. Someone doesn't mind fighting with the city for 4 months. I just don't want to do it. There are easier bucks to be made for me. And I've done the hard stuff too. I've done all of that. I've done the duplex conversions, the triplex conversion. I've done the rip the roof off the house and put a second story on. We've done all of that. And it's a pain in the ass. So I try to stick to cosmetic. So that'd be my advice for you guys. Is stick to cosmetic. Don't do the major stuff. Congrats on Florida. Thank you for hosting. Hey, no problem, Grinder. Welcome to the stream. Mike, good to see you on. Quentin, good to see you on. Don't get COVID. I mean, Port City, I've had COVID, I think twice, and it's no big deal. I mean, I'm stronger for it. I'm super strong now. My immune system's super strong. Now I have 3 kids who touch everything and then lick their hands and lick the wall. I caught my one daughter licking the floor as we were checking into the hotel the other day. Literally, she was licking the floor. Like, I was like, "What are you doing, Ariel?" Like, my kid dropped something on the table at the restaurant the other day and licked the sauce off the table. I was like, "No, we've talked about this." I'm sure I'll be sick in a week with something. Anyone who has 3 young kids, they know about the pain that I'm speaking of right now. But back to real estate, back at the Q&A here. Um, yeah, I hope I don't get anything else, any new variant or something. But I mean, it's a cold, right? Statistically speaking, if you're under 30 and you're healthy, it was nothing. Like, you actually hope your kids get COVID instead of getting what was going around. There was some really bad, like RSV is way worse than COVID, kills way more kids. There are a lot of things that are way worse. There's just a bunch of, in my opinion, a bunch of hype. It killed old people and people who are at risk. And so take precautions, protect yourself. If you're in an at-risk category or you're someone in your family's in an at-risk category, you do what you gotta do, protect yourself. But the whole world didn't need shut down. That was a bit of a, I mean, we've now come out and been like, oh, turns out this jab actually fucked a lot of people up too. Like, oh, it was like there should have been a cost benefit analysis for each patient with their doctor. And that talking about this shouldn't have been banned on social media and shouldn't have had doctors disbarred. There were some that were like called their medical license for questioning that a vaccine could be a pro-con. It's like, wait, you mean there's side effects? No, you can't talk about that. Banned from the medical society. It's like, wait, everything has fucking side effects. Anyway, I don't want to get down that rabbit hole either because that's done now. It's been a couple years. Finally, people are over it, I think, and we're moving on with our lives. Do you know how long it takes to get a permit approved to dig deeper for the basement? So, Eric, what you're talking about is underpinning. I've done underpinning once, and I've seen a couple other investors do underpin. I've been sort of part of that project. And what I can tell you is, in City of London, don't underpin. That's the result of going through it several times. Just don't. In Toronto, sure. The dollars per square foot, the value of adding that per square foot costs more than the value that it adds. Cut and dry. There are some exceptions to that. Like maybe you've got one area that fails by inspection under a bulkhead, and like maybe you could make like a tunnel or something, like not a tunnel, but a hallway, where you dug it out deeper to get around the bulkhead. I always say just pancake the ducts. Change the ductwork so the ductwork's thinner. Maybe you can it's actually still cheaper to take a load-bearing beam, support your house, and put a new, thin, thicker metal beam in than it is to underpin. There's always a better way to solve the problem than to underpin, I think. Underpinning is going away from your foundation footings, like a foot, depending on how deep you go down. So the further you go down, the further you have to go out. And you have to basically make a edge or a lip, and then you can cut. So you're gonna have like a weird bench style sort of look, unless you can build your wall to try to make it flush. But effectively, whenever you underpin your basements, you're gonna have this weird lip. You can't go right to the wall. It's just difficult. You really can't do it well and have it look high end. I mean, you can. We did one house where I had this really horrible contractor, SPM, and then and they collapsed the foundation. I guess they hired another subcontractor. I advised them. I was like, you guys shouldn't be French draining this. This is probably not the right way to do it. But I was like, hey, they're like, no, we got this. Like, don't get involved. I was like, all right, I'll trust you guys. Sue you guys if it goes wrong. It did go wrong. Foundation collapsed. We lifted the whole house. Because we were rebuilding the foundation, repouring it, wall by wall, we did underpin. That was with permits, engineers, took us a year and a half. It was a horrible project. We made like 20 grand in the end. For all that effort, I could have flipped 5 houses, 10 houses. I could have made $500,000. It's like, oh, but you still made a profit, Mike. No. Are you kidding? That was a horrible return on my investment for the time. Don't take on big projects like this. I've done it. Learn from me. I thought it was so cool. Like Builder Mike, lifting a house up and redoing it. Like, that's so cool. Not cool. Just costs a lot of time and money. Don't do it. In Toronto, maybe you could do it. In New York, maybe you could do it. The dollar per square foot of real estate can make sense to do it. But in London, nah. I just think in general, it's not worth the stress. There are better ways to solve the same sort of problems. But anyway, underpinning is effectively you're going deeper, going down, you're taking dirt out, and then you pour basically support walls. You don't want to touch your footing. Your footing sits, let's say your concrete wall goes down like this. This is your 8-inch thick wall coming down to your your basement floor. Under your basement wall is a footing. That footing might be a couple feet deep. I don't know. It's poured bigger than the wall, and it supports the wall. And if you were to jackhammer into that when you're doing your underpinning, your wall would collapse. You'd have problems. So you got to go out away from it and then go down. And so you got this weird kind of shape to your floor, and you lose square footage when you underpin. So your basement, if it's 1,000 square feet, when you underpin, it's like 800 square feet. So you lose space immediately right away, and it looks weird. I don't know. I'm just not a fan of underpinning. I don't know. I've talked to people who are about it in like Toronto, Vancouver, and New York, and you can make it work where the cost of construction is so high and the properties are worth so much money that it can make sense. There are exceptions where it can make sense, but I always say look up. And if your problem is a bulkhead, there's usually a way to solve it. If it's like a load-bearing beam, you can, again, get rid of the wood and put it to metal. Boom, all of a sudden, now that's a lot cheaper, a lot easier than taking earth out and going deeper. Especially because a lot of contractors don't know what they're doing. There's very few contractors who know how to do it properly and get it approved with the city. And so you're spending weeks with engineering. You're spending more weeks after that with the city, back and forth between them, the contractors. It's very expensive, very, very expensive to do. Anyhow, next question. Bow, 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 bow. Where do you see prices going for Ontario real estate in 2023? Great question, Quentin. What are the main benefits of the US for real estate versus Canada? Okay, so I'll start with the first part of your question. Where do I see prices going? I think there's a couple of scenarios that are possible, right? Plausible. I think further decline, possible, maybe even likely into this year. We haven't seen the full effects on default for the rising interest rates. People are still holding on with lines of credits, borrowing from family and friends. It takes a while for defaults to happen. Like when people's mortgage jumped from 3% to 6%. Like I said, I ran this through in another stream, maybe 6 streams ago, and we walked through the numbers. But like basically a quarter of all mortgages, or we'll call it about 22% of all mortgages renewed in 2022, and in 2023 another 22%. So 40% of all variable mortgages are going to renew. 55% of all mortgages are variable, 45 are fixed. So of the 45 that are fixed, almost half will have renewed by the end of this year into new higher rates. So even if they were fixed, they're having to renew about 22%, about 20% a year, let's say, because you got a 5-year fixed mortgage in Canada. That's it. Especially in Canada. Wait till I get to the US. The US has 30-year fixed rate mortgages, so people are in a different situation. In Canada, we're always renewing. You get a 2-year fixed, 3-year fixed, 4-year fixed, 5-year fixed. Pretty much it. Most people are on the 3-year, 4-year, 5-year fixed. Sorry, that's not true. Most people are variable right now. But the most common fixed product is a 3, 4, or 5-year fixed. And most people renewed their stuff in 2018, 2019 when rates started to come down. So we're seeing a lot of that catch up to people now when they have to now renew at these new rates. And their mortgage payment used to be, $2,000 a month, and it was 1,000 principal, 1,000 interest. Now it's $3,000 a month, and it's all interest, and they're saving nothing for the future. And their houses, the thing that's kind of saved it is that real estate has fallen so much at the same time that it literally you have to bring money to close. So you have nothing, no equity in the property at all. That's a dangerous situation to be in, because what do people do? Just walk away? In Canada, we have recourse. In Ontario, we have recourse mortgages. So you can't. They'll take the suit off your back. They'll take the keys out of your car. They'll take everything you have. In the US, people just walk away as non-recourse. Alberta, people walk away non-recourse. I think Alberta might be an opportunity to buy, because people feeling the rate hikes there may cause a little bit of price deceleration there, a little bit. Higher rates haven't affected Alberta that much yet. It takes time. A comp takes, if you sell a property now, it closes in, March 30th. Realtors and appraisers can start using it as a comp in April. So we're talking, if you have a massive drop in price, and then the buyer psychologically has to get over the fact that their house has dropped in value, which takes time. Even for an investor like me, it took me a lot to wrap my head around the fact that my $1 million property is now worth $750. Even in my mind, I'm I can still get $850 for it if I find the right investors looking for a lot of cash flow. It's hard for me to even for me, and I'm a sophisticated investor, to wrap my head around the price drop that we had so fast. And so it will take more time for the rest of the sellers who are desperate, the rest of the sellers, even who are not desperate, who have lots of cash like me, to eventually realize, hey, my house isn't worth what I thought it was. Then sell it for the lower price as I chase the market down. Those people will sell. Then we'll have those comps 3-4 months later. So real estate's very slow to feel the drop. When the stock market bottoms, real estate will bottom a year later, typically. So what the best time to buy real estate, to answer your question, is probably, whenever you can find a good deal. If you can find a deal right now that's under market value, you buy it, you do it. I have a business around it. It's always a good time to buy if you could buy good deals. But if you had one deal to buy and you couldn't buy any more, it's like, and you're trying to time it perfectly. Ideally, it's right when the Fed pivots. So right when the Fed says we're done, rates are coming down. That within a couple months from then is when you're going to want to buy, or right around then, before the euphoria kicks in. Even once the euphoria kicks in, it takes 6 months before we have good comparables at these new higher prices. So stuff will sell. You'll see a jump in the actual sale prices, but those haven't closed yet. They're all pending. And so until there's actual close, we can't even use it as a comparable. Appraiser can't use it. A realtor can't use it. None of us can use it as the value of the properties on the street until it closes. So that rip up, there's a delay. And so with real estate, it's nice that the market's not efficient or sophisticated. In the stock market, it's instant. You can liquidate tomorrow. What that means is, though, when people panic, they panic and it overreacts. And real estate takes a lot longer. You panic and it's like 5 months to sell your property, right? You a month preparing it for sale, then you list it, then there's a month of, or two of it sitting on the market and getting some offers, whatever, conditional, they back away on home inspection, someone else buys it, they back away on, financing condition, it falls through at the last minute, then another person buys it, they have a 90-day close, you eventually close, then you've got your sale. So your liquidity event is very far out for real estate. And that's a con of real estate, really, but it can also be a pro, depending how you look at it. So yeah, that's what I got to say about that. The second part of your question, why Canada versus the United States? For me, it's partly just, America has so many opportunities. It's just a huge fish pond. And I'm a fisherman. So like, I just see so many bigger fish here, just so much more fish, just a bigger ocean. And I was used to fishing in a lake. And so I come here and there's just more opportunity. Everyone is hungrier and more capitalist, especially in the red states. I wouldn't even invest in a blue state, like at all, period. But a red state, yeah, like I'm interested in Arizona. I'm interested in, in Florida, specifically Florida, because again, the proximity, the weather. I love that, like I can go out at night and it's 20 degrees Celsius all year round or hotter all year round in Florida. If you're in the southern part of Florida, just beautiful all the time. That's appealing. Now, do I want to be here during a hurricane season? No, I'll be back in Canada, right? Get out of here in rainy hurricane season. But other than that, I mean, it's beautiful. And you buy quality properties, not right on the water, concrete block construction, you're fine. I mean, worst case, get hurricane insurance, and it's profitable. If you run hurricane insurance over the last 10 years and you got a good hurricane insurance policy, it's actually profitable to have insurance. That's a problem that they have to fix in Florida, I think, by the way, and hopefully they do. The West Coast got destroyed most recently, right? Actually, Daytona Beach got destroyed too by that most recent hurricane in the summer too. So there's two devastating hurricanes there. So there's lots of opportunity to buy, and make sure you build quality and buy quality, concrete block construction, good quality properties, and you'll be fine. But why the US over Florida as well? So other reasons, well, in Florida, if I have a bad tenant, I'm like, hey, your rent's, it was $1,500, now your rent's $3,000 a month. Here's a rent increase. Don't pay it, get fucked, leave. I mean, that's just the reality of, I shouldn't use profanity. What if there's kids watching? I'll change my tune. I don't think that's what God would want. He doesn't want me to share that. I'm sorry. I'm around the trades and I'm used to that kind of language because there's a lot of people that I surround myself with, but I shouldn't. In the trades, using profanity is very common. And so it's kind of, when you're around people speaking like that, you get used to it. But yes, so to speak, there's the landlord-tenant environment in red states like Florida, where you can just tell a tenant to pay double the rent or get out. And they can choose to pay the double the rent if they can come up with double the rent, like awesome. You now have a tenant paying double the rent, your property's worth more money. So that's great. You can just raise the rents whenever you want. They have no protection at all. So if you're trying to arbitrage here, be careful because you have no protection at all, or very little. There are still some tenant laws here that protect people, but it's not near as, it's not like Ontario. Ontario's the worst. I have zero interest in anything long-term rental, anything even medium-term rental in Ontario, period. I don't want to own properties unless they're short-term rentals. So I would love a cottage rental business, student rental, short-term rental stuff. That can make a lot of sense in Ontario where they don't have rights, where you're catering to someone who's there for vacation for a couple weeks. You can jack the rent whenever you want. You have full control over your property. That's interesting. in Ontario still, and flipping is still really interesting in Ontario. And like I may hold a property because I can't sell it, and it's cash flow positive. I'll hold it, no problem. But I do think that, well, okay, on one hand, the 30% or so drop we've seen in the prices of real estate in Ontario is attractive. But in the large multifamily space and some of the rental properties, we haven't seen that same amount of drop yet. It's just been a bit stickier with the cap rates. So I'm waiting to see how things go. I might buy something that, if I could buy a property, if something falls in my lap in Ontario that I can burr and refinance and have no money in the property, yeah, I would take that project on probably. But I'll make no absolutes. I will. I have a great network in Ontario, and if deals fall in my lap, I have a good infrastructure of people that can handle that for me, and so it's very easy for me to take deals on. It's harder to take deals on in Florida, I find. But yeah, what are the main benefits? I guess for me, it was lifestyle. Like I want to be doing something down here in something warm in the winter. I don't want to be in Canada in the winter. And so for me, I want to line up a business here in Florida or in Arizona or somewhere warm, right? That just makes more sense for me. And so there are other benefits to go with that. Like as far as investing goes, it's a better investing climate, I find. There are a number of other things that are great about investing where it's warm. But yeah. Port City says, Mike, I have $80,000. I invested it in Canadian deal, or should I head down to Florida for maximum wealth building? It depends. It depends. I can't tell you one way or the other. Like, you might have connections in Ontario that make it worthwhile for you to do a deal locally, where you can make more money than if you try to take a deal on distance. There are some challenges, I think, for investing out of state, out of province. Is a challenge. You have to develop a power team. And if you already have a power team locally that you can rely on and lean on, and you have no one in Florida, then that's more difficult. So it also depends if you're going to partner with someone too, right? Like there's a whole bunch of challenges. Next, I got a lot of questions I got to catch up on here. Let's do like a lightning round here. Lightning round. Down. Mike says, how are you finding your power team in a new market? What are some of the best practices that you can use, you can share? So Mike, I think some things you can do are start with your realtor. I think that's like, go find a couple realtors, have them out there hunting for you. Don't sign exclusive with any one realtor. I know that's like, as a realtor myself, I'm like, most people don't know I'm a realtor, but I share it anyway. I will say that like, of course we want loyalty, but as an investor buyer, you want multiple realtors hunting for you, looking for off-market properties, all of that, right? So I think it's important to have multiple realtors, build a little power team with a couple different realtors and try them out and see who you like. And the way I do that is by location. Just like if I was dividing up a city, I might say, hey, go find someone who's really good at East London. I look for a guy in East London. I find someone who just does like the West London properties. I talk to that person. Someone just does North London properties. Someone just does South. And I would say, hey, these are the areas that I'm focusing on, or if it's different cities, maybe it's like London, Strathroy, Grand Bend, maybe Sarnia. If you're doing a couple cities all within an hour range, you get different realtors in all these different cities working for you. You can build power teams around that. And then your realtor should be able to connect you to someone. So maybe they can connect you to a contractor. Maybe usually contractors know other good contractors. So then you ask that contractor, hey, do you know a good, he's a flooring guy. Hey, do you know a good painter? Hey, do you know a good plumber you can recommend me? Do you know a good electrician? Electrician's like, hey, I know a good, whatever. And you get referrals. That's the best way. The next best way is like go on for what I've been doing, where you don't have people in the beginning. You have to go on these Facebook groups and join these groups and talk to there's probably like 50 different groups in a city. There's like a yard sale type group. There's a garage sale type group. There's like a recommends, London recommends type group. There's like, there'll be some sort of bunch of community groups on Facebook. Join them all. Introduce yourself. Say, hey, I'm new to the market. This is what I did. Say, I'm new to the market, looking for recommendations for someone to do flooring, looking for recommendations for Airbnb people. I did that. I got 6 Airbnb recommendations, people doing Airbnb in the area. And I go and interview them all. And so it's a lot of work, but you got to interview each of them. And you might test someone out and see how it goes. I got to wrap this stream up. I'm a little bit behind. I can feel my kids coming back to the hotel room soon. What are some of the best and cheapest neighborhoods in London to invest? Budget is around 350 to 400,000. The best neighborhoods I say are the good neighborhoods, but your budget is low. And so I would say, if your budget's really low like that, you're not going to find a lot of properties that will qualify at 350 to 400, other than in East London, central, maybe south, pockets of south. There'll be nothing almost in west, nothing in North London. It'll only be central, east, or south where you'll be able to find something that would fit those parameters. But yeah, there's opportunities out there. Um, Average and multifamily deal. So I guess it depends, right? Like, I see deals come up that are 100 grand in Florida, like just shabby 3 bedroom houses on like an acre and a half. So you can find stuff that's cheap that will rent for a couple grand. You can find stuff in Central Florida for 50 grand for a house. Like the house, 3 bedroom, piece of shit, like 40-year-old house. It's not an amazing house. It won't rent for more than $1,000 a month, $1,200 a month, but there's tons of those opportunities. There's nothing like that in most of Ontario. But in Florida, an hour drive, and boom, you got multifamily that's selling $100,000 a unit. Buy a 20-unit building for $2 million. It's like I saw a 30-unit hotel for like $1.4 million. It's like there are opportunities for sure in Central Florida. Now you pick like somewhere nice close to Miami or like a big city close to the water, you pay millions for right on the water. But if you're a little bit back from the water, maybe you can get something a little bit cheaper. Um, 100, 200 grand could go a long way, depending where you look. Like the house that we're working on right now was 329,000. It's a 3,000 square foot, 2-story, 5 bedroom house, built in 2009. It's a newer build, or 2008. It's a newer build house. We're just cosmetically rehabbing. It has a nice big pool in the back, good sized lot, 20 minutes to the ocean, depending on traffic. Um, in a city, north of West Palm Beach. So you can find stuff like that. 329 grand. It's probably worth 500 fixed up, a little bit more than that. So you can find a smaller house for sure. This is a nice premium Airbnb type property, a big house. You get a 1,500 square foot nice house with a 2-car garage, call it 1,600 square feet, 3 bed, 2 bath for like 250,000 if you know where to look. So you could maybe on wholesale and auction or something, talk to some wholesalers, find something for 200, 220 maybe, depending how far up the Treasure Coast on the east side you're willing to go. Maybe buy some hurricane damaged properties. Super easy to fix those up. All they do is just cut the drywall along the bottom. It's all concrete block, so it's no big deal. You do a spray, and that's it. I mean, you put concrete drywall that's waterproof down, put waterproof trim down, put some vinyl plank floors. Now it's hurricane resistant, the whole house, and you're like 20 grand. You can walk in these houses. The insurance company hired someone to cut the bottom of the drywall and rip the floors out for you. Free demo. People walk in like, oh my God, this house is horrible. It's like, are you kidding? They got like 6 inches of water. Didn't affect electrical. Didn't affect any plumbing. Didn't affect any structure. It's concrete block. I mean, it's just some cosmetic drywall repair and some flooring, some trim, maybe some new vanities, kitchen cabinets, like 20 grand, 30 grand. And you've turned around a property. You got it for a $100,000 discount. So Florida has a lot of opportunity because of the hurricanes, where you can get in and find properties that are 10 years old, like quality built properties. And you could never find that at home. So opportunity. And if you're going to do it right. Like please, for the love of God, please put in concrete board drywall. Don't put in regular drywall. Please buy concrete block homes. Try to avoid framed. Yeah, those are vinyl plank. Like I hate carpet. I hate laminate. Don't put that stuff in. It's not water resistant, or waterproof rather. Put in a good underlayment too under your vinyl plank floor, because a lot of people don't. They get water stuck under their floor, and it's crappy quality construction because people don't know what they're doing. Don't do that, and you'll be fine. Next question. Any other states you have your eye on? Again, I mentioned those states that I like. I don't think climate change is real, but it's not that big of a deal. Like, we're not going to see all of Florida underwater like some people are talking about. I mean, they build the houses now pretty strong to withstand most hurricanes. You could, in theory, build a house. In the Bahamas, they build houses on stilts. They build them designed to withstand the tropical storms. So it's like, just be careful what you're buying and how you're buying it. Yeah, like if you're talking about like zero risk, Arizona, beautiful, like Scottsdale, Arizona. Oh, Sedona, beautiful, beautiful. I was there like 5 years ago on vacation. We did some dune riding. Um, it's beautiful. I would also invest there. It's just that for me, Florida makes a lot of sense for a number of reasons. It politically is a really strong environment, and it's so close to the Bahamas. And I've just been coming here for years. I love it. But yeah, I would also invest in other warm red states. I would never invest in cold states, just not for me. Uh, uh, I go down here and catch up. Oh wow, Mason, that's insane. About the person who tore the house apart. I mean, there are people who get away with it for sure. Don't bet on it. It's high risk. I think I got all the questions. Did I miss anyone here? Bum, bum, bum. Okay, another question here. Meta's strongest fundamental company in the NASDAQ. I mean, it's not the strongest necessarily. I think Meta has the most potential for growth while still being strong. Amazon, I love. Google, I love. Apple, although I'm in the Apple ecosystem and I live on it, I just can't get behind the valuation right now. What's your opinion on investing in Vancouver for appreciation while being cash flow negative or break even? I just don't invest in that market. I have no interest in investing for appreciation, especially if it's long term. No. I can get how people get behind low cap rate properties and they can justify it. It's just not interesting to me. The return isn't high enough. Kevin says, hey, Mike, you know how much about underground oil tanks? Recently found it. Be hard to sell my house. Kevin, yeah, I mean, it can definitely be a challenge. I think environmental testing, soil testing, water testing, yes, it's a problem. You don't want that in your house, and you don't want to buy a house with that issue. Obviously, get fully remediated and get receipts, and then you'd be fine. You can show that you remediated it properly. Tristan says, Brendan, you need to buy it deeply discounted at minimum 80% of market value. I don't know what that was related to, but yes, if you can buy at a discount in Vancouver, that's still fine. You could flip, and it could be great. It'd be cash flow negative, but yes, it'd be good. Kevin says, property in Vancouver, blah, blah, Lane House, blah, 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 what do you know about the ballpark or something? Lane houses are like, because they're so low of a square footage, you pay more per square foot. So it might be like $300 per square foot to build, I think. You already have the land, so that's something. The ROI has been pretty good on those. People do it a lot in Vancouver, Seattle, all in like those, even in Toronto now, it's become a thing. So lane houses are great. I'm all for them. I think there should be more tiny houses, more lane houses, better utilization of land. I think the NIMBYs, not my backyard, the NIMBY folks should shove it and they should support development and growth. We have a housing crisis in most of the cities and not enough, available, affordable housing. So if it's my land, I should be able to do whatever I want on that land, which means I should be allowed to build a tiny house or lane house. So I'm all for those. I think, and there is legislation coming down to help support that. Cost wise, get a few quotes. Go call 5 construction companies and you'll know. The midpoint of all of those is exactly what it's worth. Get some plans together, sketch something, and then show them. Say, hey, it's two stories cheaper than 1 story, so always build up. Build up, and your second story is like half as much as your first story because then you're using a lot of existing infrastructure. Build smart, build with minimal finishes. You can always upgrade the cosmetic finishes later and just get it built for an affordable cost, and that would be my way to get it done if I was you. Run your numbers, run your comps, make sure it's valuable when you go to compare it after it's done. Will you be able to make money? That's the question, and will you be able to make enough money? Aaron says, glad I caught you. You've spoken about selling options. It seemed similar to Tasty Trade, 45 D2E, selling puts and calls, pull at 50% or roll to adjust at 30 delta. Are you familiar? Vaguely, I have seen Tasty Trade. It's one of the best free options course programs that exist. I just skimmed it. A friend of mine sent it to me. I didn't finish it. I opened the first couple pages. I am by no means an expert options trader, but I do try to buy 30 to 60 days to expiry. Or rather, if I'm buying calls, it'd be way out. But if I'm going to sell a put, let's say on something I wanted to own, then I would do a short expiration date so that the theta decay is in my favor. The option value of that option contract is, that in the future, X could happen. And the longer the closer you are to that point, the less value that option has. And so over time, you'll get that decay in your favor. So I'm a big fan of that strategy. It's basically the wheel strategy. You do the exact same thing when you sell calls. The value of that call decays as there's less and less time between now and when the contract expires, right? Like if you sold a call for a year from now at the NASDAQ QQQ at 300, I mean, it's very likely that could happen in this huge amount of time. But if it's a month away, it's very unlikely we'll see a rally of the QQQ in the next 2 weeks, let's say, or 3 weeks to 300. And so the probability of that happening is much lower for you. And so the contract is worth a lot less. But the longer the time option of that contract, the more insurance premium they're going to charge on that contract. And so if you're selling calls or you're selling puts, then you want to be the insurance company and you want to collect a premium for insuring the right for that contract to honor that contract in the future at set strike price. So yes, options can be a great way to protect yourself against downside, as well as allow you for some more upside exposure without additional risk. So I'm a big fan of options. What do you think for real estate prices the first half of 2023? Further declines or flat. I think there's no scenario where we see a rip up. So don't plan on it going up. It's going down or flat. It's not going up. There might be a little, like a short-term, fluctuation where there's like some hunger that's been holding on, but it's very unlikely we see a rip back to prices we saw before. Huge gain on stocks this year. I hope so. How much you're putting into house hack? Currently nothing. I run my own fund effectively, so I feel like I can do net of expenses better with my own fund. But I love what Kevin's doing. I support him 100%. I might throw some money his way just to, I also do wedge deals, my own wedge deals, and I know that I can manage better than a fund can. But if I was passive and I didn't have the skills I have, I'd definitely invest in someone like Kevin, for sure. Drip says, Mike, I'm getting a turnkey property in Windsor for $250K. Would like to Airbnb, net $2,000 a month. Wish us luck. Good luck. Aaron says, you'd excel, Mike. Definitely give a second look at the strategies. Call and put, premium, theta decay. Aaron, that's exactly what I already have done. Unfortunately, I wheeled down in the market. So the stock went down 40%, let's say. I lost 20%. So I didn't lose as much. Then options helped me lose less than if I just owned the underlying equities, but I still lost because of the overall environment. But I'll make it. Over the next 5 years, I'll be way up on my stock portfolio. So anyhow, we'll see you guys next week. I got to go wrap it up. My kids are outside the hotel room here and it's locked, I realize. So I got to go unlock the door for them. Thank you guys so much for tuning in for another week. You guys know where to find me at Mike Rosehart on Instagram. Again, Facebook, the same place, here every week for kind of on 6 years since I retired from my job now. That's crazy. And I've been doing this live streaming, YouTubing for you guys. All right, everyone. We'll see you next week. Thanks for coming every week. And remember, the secret to unlocking a wealth through you, 3 levers and control your financial future: spend less, earn more, and maximize returns in the difference. Bye, everyone.